a Tuesday to Wednesday opening range gap is, where do I get that information from, right? You have to change your chart to regular trading hours, not electronic trading hours. And you'll see the separation between the settlement price and the opening price on the new day. So this is what happened on Tuesday, and we have one here also. Okay, so I'm going to add this one. I'm going to change this one to a different color. It'll still be on the chart because it's very important you understand what's about to happen here. It's shaded in gray, so it's there like a ghost behind the scenes. No pun intended. The ghost in the machine. So we have the opening range gap for Wednesday, Thursday now, which is this now broader range. So there's an overlapping of those two opening range gaps. I promise you, you will never see that in books anywhere. Now, there's going to be people out there that hurry up and run out there and print their books on Amazon and talk about this because I've said it today. But this is the first time I've ever taught this. Even my charter members don't know this. So today, the 25th of May, 2023, I'm teaching you something that I've never given to the public before. So I want you to appreciate this. If you run around on your YouTube channel and create these mentorships of your own, okay, and you pretend that you knew this beforehand or have you always been doing it, you're going to look a little foolish now. So after we get this opening range gap here, the old one, Tuesday, Wednesday, we open above it, trade down, and find support at the lows of it. You see that? But it didn't fill this. Why? Why didn't it fill that? Because it has unfinished business. Where's that unfinished business? The buy stops up here. Ran up there, hit it. Now we have a gap. Just like we were treating yesterday's Tuesday, Wednesday opening gap, we had some portion still to fill in. Now we can look for this area here to potentially have a event fill it in tomorrow or reprice to it. And that's my expectation going forward. I probably am wrong. Okay, so don't put too much weight or emphasis on it, but that's how I look at it. We're going into a holiday weekend. Anything can happen. So I'm really not even doing a video tomorrow. I'm not going to be looking at the market tomorrow. We're going to be doing something for our family. So I could care less what the market does. But if you're going to hold a gun to my head and say, ICT, tell me right now what you think, I think that we're going to try to make an attempt to get down here and work towards this area here. That's what I think. Okay, if I'm wrong, it would need to go back above current new week opening gap high for me to be bullish again. There you go. So now we have both of those gaps. We have Tuesday, Wednesday opening range gap, and we have the Wednesday, Thursday opening range gap. And we're back down here on electronic trading hours. So you can see there's relative equal highs. I said there was buy side last night. Go watch the video. That's where I think it's going to draw to and get to the top of that old Tuesday, Wednesday opening range gap. Well, we did that here. Then we fell short. Notice what we did. We went above the range high there, but we didn't get to the buy side yet. Then it dropped all the way down to the low of that gap. See it? Follow it along. You still see it in here, and then boom, it's gathering all kinds of new orders, but not by itself. Look closer. What is this? It's a fair value gap at the lows. So smart money is accumulating right in here. Market rallies up, comes back down, one more tap, and then takes off, trades into a buy side imbalance, sell side inefficiency, which is a fair value gap, and order block right there. Where's the target? The buy side I told you last night. Wham! Hits it beautifully. Does it continuously keep going higher? No. It rejects it, comes back down into the range, buy side, rallies one more time, pumps in, and then fails once more. So I'm watching to see if this potential phantom trend line here breaks, and if it does, we'll be looking for the sell side here, below here, and into the gap that would be otherwise expected to normally fill. But again, it's a holiday weekend. Anything can happen, folks. The volume will be different than it normally is. There's a lot of people that simply are going to go away. They're not going to be trading. They're not going to be doing anything. So bear that in mind tomorrow. All right, so now we're on that 5-minute chart, and we're ringing in the new day opening gap. Good grief, ICT. How many gaps are you going to talk about? All the ones that matter. Okay? So the new day opening gap, and I taught this on the YouTube channel, so take a look at that. You'll find it in the video playlists for the 2023 mentorship. New day opening gap, NDOG, NDOG. So we have the closing price at 5 o'clock, and then we have the opening price at 6 o'clock. So that hour separation is what we're showing here. That's your Wednesday, Thursday, new day opening gap. Extend that throughout the day. You can see how we get consequent encroachment of it here and then sells off. Consequent encroachment is half of any inefficiency or gap. Mean threshold is half of any order block. There's a distinction there. It's very important to keep that distinction and understand it. Then we fall just short of hitting the top of it here. We work outside of it and then rally one more time. Notice that in this little area right here, we're hitting an order block, but we're also in consequent encroachment of the low and the high. Remember that gray shaded? That's the Tuesday, Wednesday opening range gap. That range here, split that in half. That's consequent encroachment. That's what you're seeing right there. Order block, consequent encroachment of Tuesday, Wednesday opening range gap, rallies, but that's consequent encroachment of that. It rallies, small little gap in here, trades down into the low end of the new day opening gap for Wednesday, Thursday. That's this one over here. And you can see real quickly, unless you have these things on your chart, or as I have them written down. I look at the chart and I have these levels in my notes. And you're probably wondering, like, can you show us your notes? It's just simply these prices. That's all it is. And labeled what it is. It's not going to mean anything to you. But I've been doing this a very long time. So I know the levels I'm looking for, and I'm looking at it in terms of time. So what's so specific about this here and this here? It's occurring around that 8:30 news embargo. So we had news to come out, and then we have the impulsive price leg that runs up, retracement, runs again, it falls short of our objective, then crashes all the way back down into an order block here, and it's also the low of what? That Tuesday, Wednesday opening range gap low. And that shaded area here, see it? It's lining up right with that order block, digging into it, and then rallies one more time, and then finally blows out the buy side that I told you last night would be the objective for today's trading for Thursday, May 25th, 2023 for ES. We slipped lower, consequent encroachment of new day opening gap. That's this gray area. Rally one more time to run into the rejection block, which is the highest up close candle here. And I know some of you are like, man, this is way too much information. You don't need all this. This is just 30 years of experience in my models. These are my tools. These are my concepts.